All right, everybody, welcome back to another episode of Wealth for the Culture podcast. I'm your host, Ollie Brady. Today, we got a real big episode, man. Everybody been asking about stock tips, all the beginners out there. So I brought my boy Zay Matlock on, and we're going to give y'all a breakdown, a bunch of different stuff about stocks, how to get in, how to purchase, different things of that nature. So I'm going to go ahead and pass it over to my man Zay and let him just give y'all a little background about himself and how he got started on his financial journey.
So what's going on, everybody? First, gotta show you love for giving me this opportunity to jump on, share my experience, share my knowledge with your audience and with the people, really. So appreciate you, bro, for real. I love doing collaborations. So a little bit about myself. As you said, Zay Matlock. I'm the founder of First Generation Wealth Building. It's a financial literacy platform. I have both a YouTube page and digital courses. And I'm all about empowering first generational wealth builders. So, I come from a background where we didn't really talk about money like that. And on my journey to build wealth, I kind of had to just figure things out on my own. I didn't have anybody really to talk to or anything like that. And so the journey of being a first generation wealth builder is one where it's a lot of ups and downs. And so that prompted me to start my platform to have a place where other people like myself, especially people who look like me, can come together and we can share our experiences and learn from one another and just help each other, what I like to say, break generational curses and build wealth. Other than that, I'm an investor, option trader. Let's see. I want to give some cool things about me so the audience can know. I'm a huge Steelers fan. So shout out to Black and Yellow fam. And I love just the whole health as well movement. So, I'm saying, I'm real big into going to the gym. So, that's a little bit about me and my background for the people.
I appreciate you, bro, for sharing that with us. Also, let me go ahead and get this out the way because I don't want anybody, this is a stock tips for beginners episode, but I do want to get this disclaimer out the way ahead of time before I have people chasing me down saying, oh, you said this, that, told us invest in this. This is for educational and informational purposes only. I'm not going to tell you nothing I'm not doing personally. I will say that, and I don't think my boy Zay is going to tell you nothing he ain't doing personally. But I do want you to know we are not financial advisors. This is all just for entertainment, educational purposes only. And I guarantee you're going to get some gems, though, but we aren't financial advisors. Well, I'm not. I mean, I don't know. I'm pretty sure. I don't think Zay
No,
is
I'm
either.
not a fan. Nope. Just, do your own research.
Yes, sir. Yes, sir. We'll talk about that too. But just for starters, let's just talk about, can you just break down what is investing for everybody out there? Like, what is investing?
All right. So if I had to break down investing, I would say investing is making your money work for you. Investing is taking the capital that you have and deploying it into a particular asset class, whether it's real estate, stocks, bonds, whatever it may be, with the expectation that that money is going to grow. That's in a nutshell, that's what investing is.
Yes, sir. Yes, sir. So, basically just making your money work while you sleep. That's what I kind of like to look at it as, that's invested at the fullest. A lot of times we work for our money, but we don't think, especially in the Black community, we don't think like, oh, we can make our money work for us. And that's how, all those wealthy people out there do it. So, and, mainly with stock investing, I won't say it's easy, but it's a nice low, you can kind of create your own path. It's a lot of avenues you could take. So,
Definitely.
So, I do what I tell a lot of people when I say get into stock investing, I try to explain, what is a stock, ETFs, and, index funds, stuff like that. Can you just kind of break down, what is a stock, what's,
Right.
ETFs, index funds, things of that nature, kind of what the difference is between them?
Yeah. So let's go through them, right? So there's a bunch of different equity types is what we'll call them. So you have a stock, right? So a stock just represents ownership in a business. If you own a share of Apple, you own part of Apple. You are a part owner of Apple. You have ownership within Apple. So whenever you purchase a share of a stock, you're purchasing ownership within that business, right? Then you have, I would call like we're gonna call them like a collection of stocks, right? Now, if you have a basket of stocks, they can have 3 different labels, and they're all kind of closely related. And we'll talk about some of the differences. So the first, we'll call them the first cousin, is going to be mutual funds, right? So you got mutual funds. These are just baskets of stocks that are typically managed by active portfolio managers, or they can be passively managed where, in since they track like an index such as the S&P 500 or the NASDAQ 100. Mutual funds typically carry higher fees because they are more actively managed, meaning like you have an active um, manager handling the funds because they're trying to beat the market. You know, most mutual funds, they want to try to get you a better return than the actual market. Then you have, like, let's call it the second cousin, index funds. Now, index funds are, again, a basket of stocks, but what this basket of stocks does is it tracks an index similar to the S&P 500, the NASDAQ 100, the Dow Jones, the Russell 1000, Russell 2000. All of these are just different indexes that are made up of different companies and businesses that fall into specific categories. And then you have the third cousin, which is ETFs. These are exchange traded funds. An ETF is very, very similar to an index fund with some minor differences, except an ETF can trade like a stock, meaning, you know, it has daily price movement. I think that's one of the things that I didn't necessarily, or that I might have left out. An index fund or mutual fund, you know, they don't trade like a stock. So you're going to go and purchase it, and then it has a settlement price at the end of the day. And then that's when they let you in. Whereas with stocks and ETFs, you can see the price fluctuate, throughout the day. But the good thing about ETFs, to get back on track, with ETFs, you can be sector specific. Let me say it that way. So what I mean by that is when you have index funds, they track an index like S&P 500. These are very, very broad indexes. They contain a lot of companies. With an ETF, you can get very specific. So you can say, okay, I want to invest in only technology companies. I only want to invest in healthcare companies. I only want to invest in energy companies. And they have ETFs that are made up of a collection of these type of businesses, whether it's technology, healthcare, and you can basically buy them as a basket, whereas having to individually go pick out these companies. And so that's basically like those 3 classes of, mutual funds, index funds, and ETFs, right? Then you have bonds. Bonds are basically IOUs. You can get them from the government or a company, and basically you give the government or the company your money, and they say, hey, we'll pay you back in 5 years with X amount of interest. That's all a bond is. Then you have like a few other asset classes out there. I don't think we necessarily have to really get into them because for probably the audience we're talking to, we young. We're going to be more focused on equities, cash, maybe a little bit of bonds. And then you have like the newer asset classes such as like crypto and foreign currencies and stuff like that. But for the most part, when most people are talking about investing in the stock market, you're going to hear a lot of people talk about stocks, mutual funds, index funds, ETFs, and bonds.
All right. And most times I like to tell a lot of people, if you don't want to sit there and do the research for every single stock, it's kind of almost like when you take like an ETF or something like that in nature. It's almost kind of like you're taking an all-star team. Shout out to Ian Dunlap. Y'all don't tune in to him plug in Market Mondays every Monday, but he kind of breaks it down real nice. It's just kind of like you got your hands on a whole all-star team, and it's just gonna work for you. If you don't want to sit there, go into detail, because I will say it is very time consuming when you first get started. Researching all these different stocks, because you got, it's thousands of different stocks and it's different companies. And if you really want to get, real detailed into it, it's definitely a nice rabbit hole you can go down just for just one company, especially if it's something that's just now coming out, just, starting to create a little buzz for itself. But, now we've mentioned, the different types of stocks. Let's go into, how do you purchase a stock? So you want to go ahead and take that away? Because it's a few different avenues you can take for buying stock today. So you can go and break that down for everybody.
Yeah. So in order to purchase a stock, the first thing you need is a brokerage account. So you need to either get an app. So you can use, I'm going to say, shout out Dough. That's DOUGH. The Dough app. It's a fairly new investing app, but it's really, really cool. It's like, it's got a financial literacy platform on it and everything like that. So big shout outs to Dough. But then you have other apps like Webull, Cash App, Robinhood, M1 Finance. So you can sign up for those and you can use those platforms to purchase a stock. Or you can go to the more established institutions such as your Vanguard, Charles Schwab, Fidelity, E-Trade, TD Ameritrade, your platforms like that. So you got either option. You go fintech route or you go traditional route. Once you do sign up for one of those platforms to actually purchase a stock, it's fairly simple. What you're going to do is once you fund your account, you'll have to connect your bank account to whatever brokerage you sign up or the app you sign up. You're going to transfer some funds, some money into your account. Once you get the money into your account, this is where the process of investing becomes a process, because you need to do your due diligence. But let's just say you've done all your due diligence and there's a stock that you want to buy. All you simply do is you just pull up that ticker symbol. You're going to open up your app or the brokerage you're using. And once you walk through the platform, it's really simple. You're just going to choose the stock you want. You enter that you want to buy it. And all these platforms have walkthroughs. So even though we're talking this, once you go through and visualize it, it's a lot easier. But it's just a matter of picking your stock, saying, hey, I want to go buy this. Usually the button says trade. You press trade. You enter in the price you want to buy it at, how many shares or how many contracts, depending on, if you're trading the options or if you're buying the shares outright. And then you just press, submit order. And it's just like checking out if you were going to buy any other type of product or anything else you ever bought. I know most of us have probably been online shopping and bought sneakers or something before. It's exactly the same way.
Oh yeah. And also, I know a lot of people, some of y'all may or may not have retirement accounts. So I just want to, mention that also, because, you have at your job, 401ks, you might have an IRA also. So, you could already potentially be exposed to the stock market and may not have any knowledge of that. So while you do have, your traditional brokers, you have more of the, up to date where it's just a straight app off your phone, that's ease of use. You do have to understand that you might be in a 401k at your job, or you might have an IRA. I have an IRA through Vanguard. I know a lot of people, that's kind of real popular. And it gives you kind of a chance to get exposed to the stock market on more of a easier level, and you might have access to somebody that you could talk to. I guess, do you want to go into while you do purchase stock stuff, you might need to have some type of advice from somebody or get some type of advising. So what would you say? Because I know you do have financial advisors, but you also have fiduciaries, which a lot of people, they don't understand the difference between the two. So you want to break down a little bit of the difference between the two, and what their role is in this whole game of investing.
Yeah. So interesting story, right? I used to want to be a financial advisor, right? And then I went through the training and, what I'm saying, I was about to get a book of business. And then I noticed that when you're a financial advisor, you're really there to help people who already have money. Like when you're a financial advisor, your objective is to find people who have assets and try to get those assets to get them to invest. So let's, dig a little bit deeper into a financial advisor. So a financial advisor is there to really help and guide you through your life as you progress through certain financial stages, whether it's saving for a marriage or, buy the house and then you get ready for retirement. They're supposed to be the ones that are making sure, helping you set up a plan to make sure that you're investing the right way. So when you get to retirement, you have enough, right? Now, typically some of these advisors, they're paid based on commission, right? So depending on how much money management you have with, or how much money they have of yours under management, as well as what products you might be signed up for with them, whether you have life insurance or, long-term disability, whatever else, products they might get paid off. So, that's the typical financial advisor route. So, these guys might be through, Merrill Lynch or what's the other, Northwestern Mutual, you got firms like that. And typically when you get into this process and when we're young, they like to start you off with like life insurance products and stuff like that. And then eventually they work you up to the investments and stuff like that, right? Whereas a fiduciary, they typically they work off what is like a flat fee. So let's see, they're not necessarily motivated by making, they're not necessarily motivated by the performance of your portfolio, because they're going to get paid a flat fee regardless. Whether you make money or lose money, they're going to get paid a flat fee. So typically advisors who work as a fiduciary tend to actually have your best interests at heart more than somebody who works on commission and is trying to make a dollar off of you. And so, if you're going to go the advisor route, I would definitely say look for a fiduciary. And I truly believe that wealth planning and wealth management, most of us can do on our own. But if you still feel like you need a little, hold handing, go ahead and get you a fiduciary.
All right. And, we're talking about buying stocks and stuff. And I do know a lot of times people, especially people I talk to, they'll associate the price of a stock, There's two different routes with this. They'll say, they'll see a stock and be like, let's take Amazon for instance, over $3,000. And yeah, all of us probably can't go out and just, everyday person that's just getting into stocks. No, we can't afford that. But for the most part now, with all these different platforms I have, kind of like if you've ever been in crypto, that's kind of how I got my start in investing. You can do what's fractional shares, right? Yeah. So it's kind of, you put a certain amount of money in and you'll just get a piece of that. So that's an option to consider, if when you're actually picking your broker and who you want to use to purchase stocks, just take that into account that some may or may not offer the ability to buy fractional shares. I'm not sure which ones don't, but I feel like most people are adopting.
Cash App offers the ability to do fractional shares, M1 Finance, Robinhood. And I know Charles Schwab is offering something. It's something like a pie where you can get fractional shares. I know those are the only ones that right now, but don't be surprised if more brokerages start to offer it. But I know those 4 do it right now.
Yes, sir. And also, that being said, we're talking about price and all that. Do consider, we'll go a little bit more detail about this a little bit later, but or we can just go into detail about it now. Just because a price that you see of a stock is cheap, it doesn't necessarily mean that it's cheap or it's a good investment. Because a lot of people, biggest one I've seen was back when Hertz was tanking, and a lot of people got into Hertz. I got people hitting me up like, oh, should I get in Hertz? And, I saved a few of my friends a lot of money. And just because you see a stock is cheap does not mean that, it's a good play or the company is worth anything. You know what I mean? So that's also, we have stuff like nickel out right now. That's another one I'm not too big on, but, to each his own. But they don't really have a product out right now. And it's just a couple places that you'll see like, oh, this is $20. Oh, this is $5. And, a lot of people get started into the stock game trying to make a quick flip, which is kind of where I think everybody has had this happen, because I've been there too. I got into stocks way back, even when I was in crypto, trying to do like penny stocks, thinking, oh man, I'm about to be Wolf of Wall Street, quick flip, be a millionaire overnight. And people don't realize, like, for one, that's not the case at all. Like, cheaper isn't always better. And I stress long-term investing at this point. If you want to get into short-term, they got futures. I mean, if you want to do options, contracts, but that's a whole different beast for another day. And we'll do a separate episode on that, because that's a whole episode of itself. I'm still learning. Zay's pretty big into options at this point.
I do options, but I don't touch the futures.
Yeah, I'm trying to get in Ian's class right now to learn that. So we're going to see how this goes start Monday. But just know that cheaper isn't always better. And that's kind of something you really got to drive home to people when they first get started. Because, a lot of people get overwhelmed seeing these prices and stuff. Like, back when Tesla, before they split, you start seeing, I tell somebody to go look into Tesla, but they're like, I can't afford no $2,000 or, $1,500. I can't afford that much money. And I get it. I get it. So this also goes into what we could talk about, which is dollar cost averaging. That's something I'm very big on. If you deal with any kind of crypto per se, Bitcoin, it was at over 10 grand at one point. Nobody can afford that for one coin. So that's how I learned about dollar cost averaging, but it's the same correlation to the stock market. And if Zay, you want to go into a little bit of detail about what dollar cost averaging actually is and what it entails.
Yeah, so I'm glad you brought this topic up because I love dollar cost averaging, and I think dollar cost averaging is a new investor's best friend. If you are a new investor or just beginning, dollar cost averaging is your best friend. So what does dollar cost averaging consist of? All it really is that every month you dedicate a certain amount of money that you're going to put into the market. So it doesn't, now here's the thing, right? Some people will say, okay, the dollar cost average method is a certain amount on a particular day every month. You don't necessarily have to do it that way. Just make sure you invest money every single month. It don't have to be, the second Friday of every month or whatever.
Hey, hold on real
Like
quick,
for
Zay.
me,
Can you repeat
I
that?
dollar cost average, but yeah, can you hear me?
Yeah, go ahead and just repeat that real quick because I think you broke up a little bit.
All right. Start all over.
Yeah, I'm sorry, man.
No, that's all good. You're gonna be able to chop it up. All right. All right. So dollar cost average, right? I love dollar cost average. I actually use it myself. And so what dollar cost average is, you invest a certain amount of money every single month. It doesn't, some people like to pick a particular day. So they'll say, okay, every second Friday of the month, I'll invest $2,000 into the stock market. Now, what are they investing in? They could be buying ETFs. It could be a particular stock. It just depends on what they're investing in. But at the end of the day, they've made an agreement that I'm going to put $2,000 into the market every single month. And over time, what's going to happen is they're going to focus on this one particular, say, let's just say, for example, purposes, ETF SPY. So that's the S&P 500 index fund. So every month they're going to buy the SPY. Some months they might get it for, say, $300. Some months they might get it for $320. But they're just going to buy it every month at different prices. Now, over a year, they might have a cumulative average of, say, $350. And then from that point forward, they're just going to keep maybe buying some every month. But as the price increases, everything they bought from that year before is going to be significantly increasing. So all dollar cost averaging is you just invest in the market every single month into, a particular asset or equity that you like. And you just do it over time to give you an average cost basis. Like I was saying, for any new investor, dollar cost averaging is going to be your best friend, because at the end of the day, you're going to get low prices and you're going to get high prices, but ultimately it's going to average out. And time in the market is better than trying to time the market, is what a lot of investors and traders will say.
Okay. Now we've discussed, how you go about buying stocks, different strategies you can use. Now let's kind of go into, a lot of people, we're talking, this whole podcast platform is about wealth in our community. And so I want you to understand, what are some of the advantages of investing in the stock market? So for one, it's kind of how we started off this whole thing. You're making your money work for you. So that gives you that first step into creating wealth for yourself. Two, which I'll let Zay go into a little bit more detail about, is if you have it's talked about in plenty of books, but the power of compound interest. Like compounding period, it's a very powerful tool. You have compound interest and might have it in different savings and stock and stuff like that. Which also you can also compound in stock. So the quicker and the earlier you get exposure to the stock market, which honestly don't let that scare you either, because you can get into the stock market at 50. It doesn't matter. There's no age put on getting into starting investing. So let's just, if you could, Zay, just talk about the power of compounding.
Okay, okay. So the power of compound interest. If you haven't heard this Albert Einstein quote, then I'm pretty sure you probably aren't familiar with it, but he says that the power of compound interest is like, I think he said the eighth wonder of the world, right?
Yeah.
Those who know, those who know how to use it will gain significant amounts of wealth, and those who pay it, basically you won't be able to accumulate anything. So what do we mean by the compound interest? Compound interest is your interest making interest, right? That's how you got to look at it. So if you invest $100 in the market and you get, say you make 50%, so you make $50, right? Now that next year, instead of your money compounding, instead of $100 compounding, you're gonna have 150 compounded, and it just goes so on and so on. When we also talk about the power of compound interest, there's also a thing called the rule of 72, right? So the rule of 72 is if you take the amount you invested divided by 72, that's how many years it will take for your money to double. So if anybody's not familiar with that formula, definitely go look up rule of 72. But at the end of the day, the power of compound interest is what allows people to start investing at the age of 20. And if you just invest $250 every month into the market and you do that for 30 years, you'll end up with well over $1 million. And when I tell people that, they're like, how? Compound interest.
Yeah, people don't realize, that money initially that you put in, it might get like an 8% return, but now guess what? That following year, you have that 8% return on top of that. That's going to build more interest, and that's just going to
Right.
keep on. It'll just turn into it'll just be like a little avalanche effect almost. Like a snowball, I guess. It'll be a little bit at a time, but once you get to a certain point, that money will, it'll just be like an exponential growth happening. And a lot of people
Yep.
don't, they don't really take that into consideration because again, we're all looking for that quick buck.
Come up. Mm-hmm.
Yep.
I mean, you got to think about it. Warren Buffett didn't accumulate most of his wealth until I believe he was like after 60 or something like that. You know what I mean? So, and that's just the power of compound interest. Like you said, that snowball effect. So yeah, we got to definitely stop looking for the quick come up and understand that wealth is a long-term game, not a short-term game. If you're looking for a quick come up, you're looking for riches. That's, you're not looking for wealth.
And that's that's not the name of the game right now, man. You want to have something that you can leave to, leave your legacy, man. Leave something to somebody that's coming after you. As a lot of us, we complain about where we start off in our journey. And, I attribute this to saying, why not help that next one in your lineage have a better starting point? Because a lot of people think, oh man, if I had to start at this point, or they'll look at the Kardashians or somebody, just had a nice little starting point and think, oh, if I got to start at that point, I'd be doing this. Well, how about you build that so that when you have a kid, they can start off here and that kid can continue it, pay it forward, and then, down the line, it's just kind of becomes the norm. And that's the goal of this. This should be, we talk about wealth and not many people attribute this in the Black community. And that's the thing, like, why can't that be the norm for us? Why can't wealth be the norm? But,
well, we making it the norm.
Oh, yeah.
I think with the movement that's happening, we're starting to change the narrative, and we're starting to make it the norm. But no, I totally feel you. I totally agree with you, bro. We definitely gotta have more of these type of conversations, and like you said, make it the norm.
Yeah. So just to get back on topic, we were talking about the different advantages of investing in the stock market. And some of y'all might listen to this and you might have already got started on stock investing. So I guess what I want to say is it's power in being diversified. So you might be off doing real estate or, you might do commodities, you might do like gold, metals, things like that. You might invest in a whole bunch of different things and never thought to go into the stock market. It's like, why do I need it? But it's just another avenue to diversify your portfolio. And if you want to just break down what the power of diversification does for you, I'll let Zay go into a little more, but what you can look at is just what happened with Corona back in March. If you were in the stock market tenfold, everything in the stock market, you might have looked at it one way, but if you know, just now getting into the stock market, it allows for an opportunity, you know, for growth in a different sector because anything can happen. You know, you got the housing crash back in '08. Just a lot of different things where you shouldn't have all your eggs in one basket. Let them, you know, get a little space and have your chance to grow. So if you want to go into about, you know, diversification a little bit more, go ahead, Zay.
Yeah, I'm gonna just say you kind of led me right into it. You hit the nail on the head when you just said that you know, you want to have, you know, you want to space it out. You want to have some diversification. Like, don't put all your eggs in one basket, right? So when we talk about portfolio diversification, I think there's two levels of diversification to look at, right? There's a diversification level of, okay, how much of my percentage of my overall portfolio is in cash, you know, equities, meaning stocks or bonds, like stock market money, real estate, and any other type of interest you have. And you need to understand that big pool of money, right? So maybe if I have a $5 million net worth, maybe it's because I have $2 million worth of, you know, 2 million worth of real estate assets. I got another million that's in the stock market. I got, you know, some cash over here, and I got some business investments. So my overall portfolio, you know, my asset allocation would be, you know, depending on that breakdown, you know, 10% or 25% real estate, 25% stocks and cash, businesses, and so forth, right? Now, let's dig down and go to level 2, right? So I mentioned that I have a stock portfolio. That's another way that you're going to get diversification. So within my stock portfolio, I'm going to have more diversification. And what I mean by that is I'm going to diversify by sectors. So, you know, maybe in that $1 million portfolio, 50% is tech, you know, some of it's going to be healthcare, maybe 25% is the entire market, and so forth. And so I'm going to be diversified like that. Or let's just take rule of thumb asset allocations. When you're young, they say you should be 80-20, 80% in equities, 20% bonds. And as you grow older, you should start to level that out. Like once you start to get older, your equity exposure should start coming down, and you should probably add more bonds, because at that point, it's not about growth. It's not about capital appreciation. It's more about capital preservation. You want to start being able to preserve all that wealth that you've accumulated. So you don't want it to be in risky assets. To your example, imagine if I'm close to retirement and I have $1 million in the stock market. Well, the stock market dropped in February and March, you know, damn near 40%. So that means my $1 million is now, you know, 600 grand. That's tough, you know, and especially if I panic and I sold and then I didn't hold, because, you know, we did bounce back. But yeah, so that's portfolio diversification, 2 levels. I want people to really make sure that they also look at the big picture of overall diversification. And then when you're investing in stocks and stuff, think about your stock portfolio diversification.
All right, I appreciate you for giving that insight. But you know, so these are just a little, you know, these are just a few of the advantages. I mean, we can go on and on about all the different things, you know, reasons why to take advantage of the stock market. But we did mention earlier in the disclaimer, doing your own research. But I'm gonna just back it up a little bit further. The key when you get into the stock market, as far as me and anybody else I've talked to that's in the stock market, I would say first and foremost is to have a plan. Because if I promise you, you'll get into this game, and it can get overwhelming, especially if you don't really know what direction you want to go in. And if you just want to, can you just kind of break down why it's important to have a plan when you come into the stock game?
Yeah, I mean, let's look at it like sports. If I'm going to play a game and I go to the football game and we ain't done no practice, we ain't got no playbook, we ain't do no scouting on our opponent, we just coming into the game and we just jumping in. We don't know nothing. You're gonna get ate alive. Like, that team would get smashed. They wouldn't even know what hit them. And the stock market is the same exact way. The stock market is like a game. It's the Bulls versus the Bears. So just to kind of break that down real quick, Bulls are typically people who want prices to go up. Bears are people who want the price typically to go down, right? And so, when getting in this game, having a strategy is so important. Having a strategy and plan is so important because you need to know what you're going to do when you get in this game. If you come in, blinded, you know, it's some sharks, it's some whales, and they will eat you alive. So it's very important to do your due diligence. Sit down, and here's all right. So I'm gonna give the people who are listening some tips too, right? So when you creating a trading plan, here's a couple things you want to do. You want to do some fundamental research. Check the balance sheet, check the income statement, check the revenues. Check you want to check the PE ratio. That's the price to earnings ratio. So for every, how much am I giving the company for $1 of their earnings? That's what PE ratio means. So if I got to give you, if you see a PE ratio of 15, that means I give you $15 for $1 of that company's revenue. So, do some fundamental research, right? Then you got to do some technical research. You need to identify, what are some pricing levels. Where is there a level of interest where people are buying? Where is there a level of interest where people are selling? You need to make sure that when you're getting into the game, you set profit targets. What profit target do you want to reach? And if it hits your profit target, what are you going to do? What's your plan? Are you going to sell? Are you going to shave some? So all of that is critical thinking that you need to do whenever you're about to, whether you're going to invest or trade. And I think that's something we really haven't touched on yet, is that there's a difference between investing and trading. And I think that's another big thing that people who are new to the stock market need to understand, that trading and investing is not the same thing.
Definitely not. Yeah, I was just about to get into that because a lot of people, they hear the term trading and they think that, oh, I just want to be a trader. But you don't understand, you got there's so many different types of traders, and you got the scalpers, which is for the most part that's in and out. Which if you
Yep.
trade, a lot of people, y'all might trade forex. That's real hot right now, and a lot of times you come across people that they're a scalper and they're just trying to get in, get out, make that quick buck, make that quick flip. And that's what we talk about when you get in the stock game. I mean, yes, you can do that. You can make a living off of that, but that's a whole. To me, that's kind of like level 100. You got to start. You're at level 1 right now. You're a beginner.
Right.
Most people listen to this. You're a beginner, so you don't want to overwhelm yourself. Because when you overwhelm yourself, you'll just end up burning yourself out. You'll lose a little bit of money. You'll just be like, forget it, I'm done, and it'll just leave a bad taste in your mouth. You'll never want to mess with it again. So you got
Right.
scalper. I know you got day trader,
Yep.
which that's typically you're in the trade for you might be in it for the duration of the day. It might be 20 minutes, 30 minutes, might be 5 hours. So it just depends. You kind of analyze the market. You've done your technical analysis, which I'll do a whole different YouTube about that later on. But you'll have your technical analysis. You'll understand what's going on. You might understand the highs and the lows of the day, the volatility, all that. And you might just be getting in for that day, knowing that when it hits this target, I'm out. And whatever percentage you get, that's what you're looking for. Then you have swing traders, which
Yeah.
swing traders, this is kind of one of those things from the people. I would say that you want to trade, you don't have the time that's dedicated to do day trading or scalping because you can't sit at the computer all day and watch charts all day. So you might have just kind of broke it down. You might be on a bigger time frame on a chart, and you might have seen something that caught your eye on a trend, and so you might buy in, holding it from anywhere within, I guess, like 1 or 2 days maybe. But this could range. I know people that do swing trading. They might be in a position for months. So it just depends. What you have to understand yourself. You have to understand who you are as a person, and that plays a big role in it. Now, you also have, when we start talking about it, like actual investing, when you just take out a position, which is where I've gotten to in my trading. I don't know about you, Zay, but where I've gotten at is I kind of buy stocks when I look at them. I might have 10% of my portfolio just to go crazy and be silly and take a little bit of risk. But most of the time when I'm buying a stock, I'm looking to hold it for at least 3 to 5 years. Like, that's just kind of my mindset. If I'm buying something, I want to hold it for
Mm-hmm.
3 to 5 years. And when you start talking about anything less than that, for me, it goes into mainly that's just short term quick plays. It might be whether it's futures, it might be options or anything of that nature. So it just depends, what you're looking at. I mean, do you have anything else to add to that? I want to say I think I hit all of it, but you might have a little bit more detail on it and insight on it.
Can you hear me?
Did
Can
I
you hear
cut
me?
out? Yeah, I hear you. Did I
No,
cut out?
no, we good. I heard everything. It just I seen a little thing pop up, so I was like, before I even start going, let me make sure you can hear me. But no, I think you covered everything. You got scalpers. So for those who may be like, can you give a different perspective? This is how I like to explain it for people who might be new to the stock market, right? So let's look at it like this. Those who might be familiar with real estate, you can associate it like this, right? So your scalpers are going to be your wholesalers. When you got a person who's a wholesaler, they're typically, they just, they're trying to, they want to make a quick buck on the deal. They in and out, right? Then you have like your swing traders, which are like your rehab folks, right? So they're gonna buy the property, fix it up, then they're gonna look to sell it. That takes a little bit more of a process. Then you have your buy and hold investors, right? Those are just like your buy and hold real estate investors who actually buy the property with the intent to hold it and get rental income. So for those who might be like kind of like, okay, well, what is the difference? That's another way you can look at, okay, and figure out what style works for you. Are you used to that high pace, fast, environment? Then maybe day trading and scalping is for you. If you need something more laid back, swing trading is probably going to be more your thing. If you really want a hands-off approach, you need to just invest.
At the end of the day, the main thing that I just want to get across to people when it comes to talking about stocks is just take action and get involved as soon as possible. Because at the end of the day, you have an idea, you know, I say do your own research. But you have an idea of what's a reputable company. You have companies like Microsoft, Google, Amazon, been around forever, and they're always growing. So you know at least off top about at least three companies that you could go put money into and just be comfortable knowing that in the next 5 to 10 years they're gonna still be around, still gonna be dominating their market, and that'll give you, like I say, it's that money making money while you sleep. But while we're on this topic of talk about, what type of what type of person you want to be, like a trader or investor, also I think what we need to hit on is understanding your mindset, knowing yourself, and
Mm.
and really understanding the power of being disciplined. And you have to. This is going to be tough for people because when you are in any kind of investing, you have to take emotion out of it. You have to get emotion out. So I'll let Zay kind of go into. I see. So I'll let him go into a little bit more detail on just knowing yourself and all that. If you go ahead and take it away, Zay.
Yeah, man. So it's funny. I'm laughing because when you let in with it, I was gonna be like, yo, you gotta control you have to take your emotions out of it. Like you hit the nail on the head again. Like when it comes to this investing or trading, it's all about the numbers. You have to remove all emotions. It's got to be all logical, strategic thinking. You cannot get your emotions involved because as soon as you get your emotions involved, you're gonna get burned. Investing is not made for emotions because here and let me provide more context of why it's not for emotions. As retail traders, as new traders or new investors to the market, we are investing or competing against institutions who have spent millions of dollars on computer algorithms that take in crazy amounts of data and process it way faster than we ever could imagine. And they're processing trades and investments milliseconds to the millisecond. You know what I mean? These high frequency supercomputers. And so with that being said, it's going to be real important to just say, you know what? I need to remove all my emotions. I will not get emotionally attached to any of these stocks. It's all about the numbers. It's all about the data. It's all about logic. And do I realistically believe certain things are in place or certain catalysts are in place for this stock to do what it needs to do? If you start saying, I hope, I wish, I assumed, stuff like that, and it's not based on any real technical analysis or fundamental analysis or anything like that, that's when you're going to get in trouble. So again, I think you hit the nail on the head as far as just, you got to take the emotions out of it. Make it all about the numbers. Make it a number. Make it about the math.
And I just want to, touch on real quick. Understand something. When we talk about emotions, it's not all bad. But what I can say is those good emotions, mainly what I want to hit on is greed. That that can really mess you up. Like you might trust me. I'm pretty sure anybody that's investing has got by that greed bug. And you have to, like I say, you have to know when to get out. But like I say, it just depends again what type of trading, or if you're investing long term. It depends. But a lot of people go into stuff with a greed mentality, and they let that cloud their judgment, and they'll know better than to get in a position. And because they think, oh, this is goes back to quick buck, and a lot of times that'll come to bite you. So just understand, you have to be real disciplined. You have to take emotion out of this. And a lot of people like to say, oh, whatever. But as they said, man, it's very crucial when you start getting involved in stocks, because if you were a person, when that hit happened, that was just scared and didn't trust your analysis, or didn't trust, the fact that you believed in this company back in February, March, when we just took this hit, you would have sold at a loss and would have been stuck. And what I like to tell a lot of people is the difference between when you're in the stock market, and like a lot of people might, if you're like trading forex, whatever, we'll put it like this: you don't take a loss until you sell at a loss. A lot of people don't realize that. Yeah, every company has hard times, but again, that's where your research comes into play, because a company could just be having a bad year because they may be looking into innovation or anything. It's just different avenues companies take, because at the end of the day, it's still a business. The business still got to operate day to day. And a lot of people don't realize, they just see the stock. Like, a stock is one thing, but you got to understand the stock is not the company. Like, that's not impacting nothing going on in there. And, what I like to tell people to start off with when they're actually researching is kind of just get into the fundamentals of a company, who the management is, what sector they're in, what's the longevity look like for that company, just different things. If you want to go into a little bit more, Zay, just about like fundamentals when looking at the company, you could go ahead.
I mean, you hit the nail on the head, bro. You let it right into it. I mean, when it comes to fundamentals, I mean, you just, you're going to be looking. And I think we talked about it earlier when I walked through the trading plan of what you should look at. PE ratio. You want to look at the management. You want to look at the financials. When you're looking at fundamentals, you want to see how strong is this business. So look at the balance sheet, income statement. The cash flow statement. That's when I was looking for. You want to see, is the business bringing in cash every month? So, those are some of the things that you want to look at from a fundamental standpoint. You also want to look at, okay, like, what is this company's moat? Like, what is their competitive advantage? What is it that they have that's special that other companies don't have, or what makes this company special? So, yeah, when you're digging into those fundamentals, I mean, everything you said, I piggyback on, and then, just go, make sure you really dig into those balance sheets, into those 10Ks and 10K and 10Q forms. And if you want to know where to find those, you just go to sec.gov. You can type in any company and you can pull those up. So, yeah, when you're doing that fundamental research, those are the kind of things you want to look for.
Oh yeah, for sure. And I know you were just mentioning, what's things to look for, fundamental analysis, but just understand, trying to think where I want to go with this. Because as you start researching these companies, what I will say is that happens a lot of times, you'll kind of pick up on certain patterns in the market as well. Because once you start exposing yourself to the market every day, you'll start picking up on, different things. Like you'll start understand where the highs are for this company. You'll understand where the lows are. You understand how, if you want to just say you want to be like a day trader or anything like that, you understand how it moves within the day, based off of just little things that you do in technical analysis. But you also understand that you'll start picking up, certain times of the year when stocks are, going up, and, you understand maybe this month, stocks kind of take a dip. Guess what that means? That's an opportunity for entry. Because a lot of times I think people they get into stocks and all they hear is, buy low, sell high, but you don't know when that is. Nobody can, like, we can predict the market. I'll put it like this. You do your analysis to get a gauge, to make an educated guess, per se, to when to get in. Because if we all knew when the market was going to go up and go down, we'd all be rich. Like, we'd all have money. But that's not
Right.
the case. You just got to trust yourself and trust your research. And like I say, it's not no, I'm not gonna say you got to walk before you can run. You're gonna have to start off slow, start off with like one, two, three companies maybe, and you know, at the end of it,
Honestly,
you
I
might
would tell
be,
them not. I would tell people don't even start with companies. Start with an index fund. Like just
yeah.
do, like just straight get a S&P 500 index fund, like VTI, VOO, SPY, SPYG. Those are all basically S&P 500 index funds. So you can buy those, and you're literally buying the entire. You're basically getting the best companies on the stock market.
Mm. And if you don't want to take that route, you want to go into stock, like just buying a share of a single company, I will say really dive into that company, because I'll just throw out a couple examples. Let's look at McDonald's. A lot of people say, "Oh, McDonald's fast food," but nobody realizes all the real estate they got. So you just got to understand different things that companies are doing, that's not apparent to the naked eye, just like the everyday consumer. So you just need to know what you're invested in. And the most important thing before you even get into stocks, like, yes, you can go to the index funds, you can go into funds. I think that's the smartest way to go if you're just getting started as well. But just understand, still do your research, because you might see opportunities in individual stocks that may not be a part of that fund that you're in, that you might want to be exposed to and get into. So just understand the different things that go on within that company, because at the end of the day, it's a business, and that business has day-to-day operations. So you just have to understand that as well, and just understand that, yeah, you're doing stocks, and yeah, you're about making money, but understand that businesses have highs and lows, ups and downs. It's not a straight, clear path. It's a roller coaster. So you just have to
Right.
understand everything going on within that business when you start talking about
Right.
stocks.
Right.
Also, I think we covered pretty much everything, I would say, from a beginner stance. So I want to thank you, Zay. I appreciate everything going on with you, man. I want to thank you, and I want to go ahead and go through this lightning round I got going on when we close
Oh,
out all
lightning
our
round. Okay.
shows.
Okay.
Yeah, I
Let's
got a little
do it.
lightning round.
All right. Let's
So
do it.
everybody's on social media. I want to ask, what are some black standouts on your timeline right now?
I Am Mark Monroe, the Come Up series, Master Investor, Earn Your Leisure, Wall Street Trapper. Yeah, a lot of black. I Am an Investor, so that's Terry. Let me see. There's some like Jolyn. A lot of black excellence.
Oh, yes,
Yeah.
sir. Yeah, we kind of follow the same circle, so I already know what you're talking about, man. And so next question: what failure taught you the most? I mean, with anything, it doesn't have to be related just to stocks.
Mm. Um. I- what? That's a good question, man. You got me stumped on that one. All right, so I don't know if I can point out a single one that was a big thing, because here's what I like to do. Anytime I fail, I look at it as a lesson learned, and I always come back and try to bounce back. So every failure has been important for me, because it's always taught me a lesson, and it's always, taught me how to persevere. So I can't think of any one particular failure that like really motivated me, because anytime I fail at anything, I'm like, I got to get this right. I don't like losing at all. So, yeah, every single one has taught me a lesson. That's how I'm gonna look at it.
Okay. All right. So next question is, what is one thing that you think the black community as a whole needs to improve on?
Our unity, plain and simple. Our unity. We have a lot of people doing great things, and sometimes we often go out and try to recreate the wheel instead of either collaborating with each other or joining forces with each other. And I think that would make the process a whole lot easier to, galvanize the black community. So I think, one of the things we have to really work on is just stop with the infighting, and really just say, you know what? There's so many battles we're fighting that we need soldiers on all fronts. We need soldiers in the political realm. We need soldiers in the financial realm. We need soldiers in the entertainment realm. We need Black advocates in all these different industries and sectors. And, they all are going to be a different priority to us. For me, economics, economic freedom and, financial literacy, that's what I'm big on. That's what I'm preaching to the Black culture. There's other topics that are very, that are just as important, but they're just not as high on my priority list because I'm just not as passionate about those. But there's other people who are just as passionate, and we still have to support those people. And we need to be able to agree to disagree and still push our culture forward. Just because I'm not as passionate about you on what topic you feel doesn't mean I don't think that topic's not going to benefit Black people. I'm just pushing my narrative, which is I think economics is one of the foundations. So when we can come together and get past those differences and really be able to just say, you know what, we agree to disagree, but at the end of the day, we're doing everything for the good of the culture and we're pushing the culture forward and we are a unified front, I think, then we'll be able to do some real damage.
All right, that's definitely big because a lot of people think it's just a competition out here, and a lot of things like me and you both kind of mention a lot collaboration over competition. Because at the end of the day, what you're good at, I might not be good at. What I'm good at, you might not be good at. And if you come together, you got a powerhouse instead of just having these individual fronts. One brick is one thing, but you go put them all together, you got a whole wall, and you can't penetrate it. So that's real big. So next question is, what's one piece of advice you would give somebody? It could be advice about anything.
One piece of advice. What? This is tough, man. One piece of advice. It's okay. So I'm gonna say two because I can't really. It's hard to pick, but I'm very passionate about both of these. Number one, don't make excuses. Number two, don't quit. I think if I have to give, when it comes down to, any advice, like I said, my first one is don't give no excuses because at the end of the day, there's people who are in certain situations worse than you and they're making it work. And if they can make it work, you can make it work. Figure out a way to be resourceful, figure out a way to find resources, reach out to people, do what you have to do because nobody's going to give you anything. You have in this world, you got to go out and take it. And so if you don't, if you're one of those people who make excuses and complain, we don't vibe. And I just keep it real. I understand there's certain, there's always exceptions. And, you got to take it by case basis. But, for those who have the ability to do things and it's just like pure laziness, I can't do that. And then the second part is don't quit. Like if you are a go-getter and you do fail multiple times, don't give up. Like I said earlier, take every failure as a lesson and get better. Come back to the drawing board. All right, what went well? What didn't go well? What can I change? And how can I come back even better? Don't quit. I've tried to start a few businesses and, they were kind of good and then they would fizzle out. And I would just be like, all right, well, what went well when I started this one? What didn't go well? And then, I kept trying the process over and over and over again. And now it's like, all right, I finally cracked the code. Like I got it. Like, what I'm saying? All those different lessons have led me to where now I have a successful business. So, that would be my advice to the people.
Yeah, big. That kind of remind me of my boy. Shout out Melvin. He's always said, "Don't make excuses, only improvements." So yeah, that definitely resonated when you said that. So I definitely agree with that. Like you just can't give up, and a lot of people get discouraged. But at the end of the day, most people not gonna get it right on the first try. So you got to learn from it and just keep on pushing.
Yep.
And last but not least, I just added this question, but I think this would be good, people, because I'm gonna start doing book reviews and stuff like that. And what's one book you would give people, just to read, just for any reason?
Does it have to be investing or just like a life?
It could be anything related. It could be related to stocks, life, entrepreneurship. It don't matter.
All right. So I'm a pick the book that really changed my life. It's a book called Your Money or Your Life by Vicki Robin. That book right there is what really made it like click for me. It was like, yo, do I want to live my life or do I just want to work and die? So, and it is a finance book, but it was just a book for me where it talked about calculating your time value of, the value of your time, how to eventually become free and stuff like that. So for me, that was just a very powerful book. And then another book, if you just want like a life book, I would recommend a book called The Go Giver. That was another great book. And it just talks about how ultimately, if you want to get anywhere in life, you have to be a giver. And so that was a really dope book, and really inspired me to just give as much value as I can, and not expect anything in return.
Dope, man. Appreciate you for giving those two books out. I'll plug them in the show notes.
Yep.
So I want to thank you again, man. I appreciate you for coming on, man. You didn't have to do this, and I appreciate you for everything, man. We chop it up often now, so I just want to thank you, man.
Yeah.
I'm gonna get you. I'm
No,
definitely
my
get
bad.
your
I didn't mean
shirt
to cut you off,
size.
bro.
Oh yeah, I'm gonna definitely get your shirt size, man. I see your shirt out there, man. I see some merch. Oh, I also
Yeah,
want
I
to
did
say,
that shirt.
I also want to say, I see your wife's pregnant, so congrats to that. Also, my brother, congrats, man, congrats. So go
Appreciate it.
ahead and do me a favor, though, man, and plug in anything. I know you got courses out there. You got the stock,
Mhm.
your little stock club, run it up, I believe, and your
Yep,
YouTube. So
yep.
plug in all your social media, your following, and everything you got going on.
Cool, man. Well, first, before I do that, I want to thank you for the opportunity, man. I love your platform, everything you're doing, brother. Let's continue to just generate great content for the culture, whether it's podcasts, YouTubes, blogs, any way we can get this message out of Black wealth. I'm 100% down with. So big shouts out to you. Definitely want to, say thank you for this opportunity to come on your platform, share my story, share my knowledge, and background. And so as far as what I'm doing, so projects. So, like you said, you can find me on Instagram, First Generation Wealth Building. Twitter is First Gen Wealth. You can YouTube me, or my YouTube channel is First Generation Wealth Building. My courses, you can go to gumroad.com and type in First Gen Wealth. I have a how to read charts for new investors course where I break down how to analyze stock charts and basically teach you technical analysis. I have a options course for new investors where we break down the ins and outs of trading options. And then I have a fundamental investing course where we break down the ins and outs of fundamental investing and investing for the long term so you can retire. And then, like you said, I had all of that is within my Run It Up program. And then associated with that is we have a private community and we do bi-monthly Zoom calls where we break down strategies and stuff like that and just talk about different stocks. And so, yeah, at the end of the month, I'm gonna be doing some repackaging. The value that has now come with that course, has went up. So I'm gonna do some repackaging because I've added that new course. So I'll have some special things coming at the end of the month. So definitely follow me. Stay tuned. Stay tapped in. Got some really big projects coming for 2021. Yeah, man, business gonna be booming, bro. We definitely had to do some more collabs, man. I would love to get you to come on my YouTube channel and actually talk about, what it's like to start a podcast. So I got some big things that I want to do in 2021. And so people tap in and, lock in with your boy.
Sure, man. Appreciate you once again. This is Zay Matlock once again, and I appreciate everything he's doing for everybody out there, man. Because again, it takes a village.
Yes,
So
indeed.
that's all, man. We're gonna sign out now, and I appreciate everybody for tuning in and listening.